Back to Curious Commerce, Capital Budgeting, Part 2nd. Let us start with a very important concept, avoiding wrong decisions. In business, decisions are not small. They involve large amount of money and long-term commitment. If a company makes one wrong investment decision, it may lose not only the money but also time and reputation. Capital budgeting helps in analyzing projects before investing. It checks whether the project is profitable, feasible, and worth the risk. For example, imagine a company invests 20 lakh rupees in a new product without proper study. If the product fails in the market, the entire investment is lost. So, capital budgeting acts like a decision filter. It removes weak projects and allows only strong ones. In simple words, it helps the company think before it invests. To understand the real problem faced by the business. Many people think businesses fail due to lack of ideas, but in reality, businesses fail because of wrong decisions. The common problem include investing based on the emotions or the assumptions, ignoring the risk factors, focusing only on profit and not on cash flows. For example, a businessman sees a successful restaurant in one area and opens a similar one in another location, but due to poor demand, the new restaurant fails. So the problem is not the opportunity, the problem is the wrong evaluation and poor planning. This is why we need a proper system like the capital budgeting. Because of these real problems, there is a strong need for a scientific decision making process. Capital budgeting provides that structure. It helps to analyze the different investment options, compare their benefits and costs, select the best alternative. Without capital budgeting, decisions are based on guesswork. With capital budgeting, decisions are based on logic and analysis, so it converts uncertainty into clarity. Now, let us understand why capital budgeting is important in businesses. The investment decisions involves huge funds for the long term in nature, and the investment decisions are difficult to reverse. So, mistakes can be very costly. The capital budgeting ensures careful planning, proper evaluation, better decision making. For example, building a factory or buying a machinery cannot be undone easily. So, every decision must be taken after proper analysis. That is why capital budgeting is not optional, it is essential. Again, let us connect this importance with avoiding wrong decisions. Capital budgeting helps to reject unprofitable projects. and accept only those projects that add values. For example, if a company has two projects, one gives low return, another gives a high return. Capital budgeting helps to select the better one. It also considers risk, not just return. So it protects the company from making costly mistakes. The main objective of any business is profit maximization. Capital budgeting helps to achieve this goal. It allows the company to compare multiple investment options, select the project with higher return. For example, project A gives rupees 1 lakh return, project B gives rupees 2 lakh return. Clearly, the project B is better, right? But the capital budgeting goes deeper. It also considers the time value of money, risk factors, and etc. So it ensures not just profit, but maximum and sustainable profit. It also increases shareholders' wealth, which is the ultimate goal of any company. So the capital budgeting is directly correlated with the objective of the business, that is the profit maximization. Every business resources are limited. No company has unlimited money. So it is very important to use resources efficiently. Capital budgeting helps allocate funds to the best project. It means that the limited fund must be used wisely. Prioritize the investments. It means that it helps to prioritize the project, which one is best. And the last one is avoid wastages. It means that avoid the wastage of the resources. For example, if a company invests in a low return project, it loses the chances to invest in a better opportunity. This is called the opportunity cost. So, capital budgeting ensures that every rupee is used in the most productive way. Capital budgeting is closely related to long term planning. Investment decisions affect the company for many years, cannot be easily reversed. For example, buying a machinery or opening a branch is not a short term decision. Once done, it becomes a long term commitment. So, decision must align with the company goals, future plans, and the market conditions. Capital budgeting helps in making these long term strategic decisions. From a manager's point of view, capital budgeting answers three key questions. First one is, where should we invest? Second question is, how much should we invest? The last question is, which project is the best? Managers cannot rely on the institutions or the guesswork. They need the proper data, systematic analysis, and reliable methods. Capital budgeting provides all these tools. It helps managers to take confident and informed decisions. Quickly revise what we learned. Capital budgeting avoids wrong decisions, solves the real business problems, It helps to maximize the profit of the company. It ensures efficient use of the resources and it supports for the long-term planning. In simple words, it is the backbone of smart business decisions. In the next video, we will learn about type of investment decisions. This will help you to understand how businesses classify and choose investments. Stay connected with the Curious Commerce. Follow WhatsApp channel Curious Commerce Financial Management Hub for daily updates. If you want to know the real business secrets, follow Curious Commerce. Thank you all.